So thank you for being with us this afternoon. Hope you enjoyed the morning, if you were there before, and the lunch break. We will be discussing internationalization from a fund perspective, both VC and LP. So we'll have quite a few perspectives to bring in, right? Those two stakeholders. We'll discuss, of course, international matters, but also from a home market perspective. There can be a strategic approach to it, more technical points. So a lot to discuss. As you saw, we have a double duration slot for this panel. So hopefully we'll manage as well to keep some time for your questions. I'm Laurent Pacheco, the managing partner of a family office interested in healthcare network. So if that concerns you, you're very welcome. And more routinely, on a day-to-day basis, I'm a VC investor with Solas Bioventures, an American VC. We focus on health tech, including medicines and medical device. We have a beautiful panel today, Lidia, Samir, and Shelin. Unfortunately, the TV doesn't show, but you have better than that, right? You have the live animals in the room. And so we'll start with introductions. Lidia, please.
Thank you. Thank you so much for having me here. So I'm partner of SIGF. We are a strategy fund that it's putting up, and we are focusing on infratech. We believe that infratech right now is the resilience market somehow on the going. But fortunately enough, we have proven strategy and thesis already ongoing. We are concentrated mostly in Europe, and some of my partners are already around too, just in case if you want to come up. I'm based in Brussels. Yeah, they're somewhere. I'm based in Brussels, but our strategy is based in Liechtenstein. So thank you.
Thanks, Lidia.
Afternoon. Good to see you all. I run a family office, largely real estate and commodities focused Africa, Asia, and Europe. And I also privately invest in the tech, startups, and scale-ups. A lot to do with sports vertical in fintech, AI, medtech, climate tech, and of course, sports tech. That seems to be a passion of mine as a former elite athlete and former chairman of the football club. Actually, all three of my kids are on England player pathway to play hockey for the country. So sport is more than just business. Huge passion there and trying to sort of get that agenda onto the global stage.
Hi guys, so my name is Shelin. I actually work for a company called Creative Zone. We are based in Dubai. So I've left a sunny Dubai for a quite sunny London this week, so I'm quite happy. We are a corporate service provider. So we do everything from the initial setup for a startup that wants to expand into the Middle East. So we don't just cover the UAE, Saudi Arabia, Bahrain, Qatar, all of the GCC in general is pretty much our domain. The most well-known is obviously Dubai. Everyone knows it. Everyone thinks it's its own country. But we do everything from restructuring on a larger scale. So trusts, foundations, holding companies to normal operating companies. We help with visas, banking, tax and accounting, all of the fun stuff that gets everyone excited. But we essentially give the platform and the foundation for you guys to do what you do. So that's why I'm here. Hopefully I can give some good input.
Very good. Thank you, Shelin. So let's get going. We'll start with you, Samir, and a quite high-level introductory, I guess, question. Which regions or asset classes do you think are becoming attractive, I guess, means trendy these days, and why?
Yeah, it is a good question. I think we discuss regions and asset classes amongst the family office network all the time at various events and dinners. And I think we're seeing huge trends when it comes down to the regions in Southeast Asia. We're seeing it in places like India. I think the phenomenon in that kind of region from what used to be very much the support sort of system of the tech world, we're now seeing very much as a driver of innovation. Luckily for us in the UK, there's a very good relationship with Asia in general, whether it's Hong Kong, Singapore, or Southeast Asia in general, and of course India, with a huge amount of Indian billionaires based out of here. On the trend side, family offices, I often talk about, are becoming hugely important in that investment ecosystem. I think from what used to be a very sort of scattered, siloed approach in the past has totally changed. And of course, we've got to look at the Rothschilds and Rockefellers from the 19th century, how they really defined that family office, the next generation and wealth preservation side of the equation. Actually, this week, I was in one of the sort of historical buildings of the Rothschilds, where so there's so much history. So kind of on the tech side and the asset classes, we are seeing that integral role that the family offices are playing. Laurent, you mentioned about health tech and the importance of, I guess, the 21st century living. I talk about the sports tech and climate tech a great deal, because I think we have to become a lot more sustainable, not just in the classical sort of terms, but in the actual actions. I see sport as a great connector, not just from a B2C perspective, which is why many companies, many investment groups are trying to come into it from a different angles, but also, as somebody mentioned the other day, sports is a religion. When you look at gaming world, so esports are 3.3 billion and traditional sports in 5 billion plus, you're really talking about the entire planet. So that the trends are really going into the healthier lifestyle living around the world. The regions are in Asia and Africa is fast moving as well. I was recently at the event to do with the African startup ecosystem. Unfortunately, we've not yet seen the Africans LPs coming in, because it's mostly the European LPs that are investing in the African ecosystem. But I'm bullish about Asia and Africa when it comes down to the opportunities on the geographical region. And of course, with AI and sort of quantum computing and everything to do with innovation, that's where the opportunities really sit. And last to mention, I think the space is interesting, not just from the tourism viewpoint, but also from what's happening in the medical R&D department. Some of the toughest illnesses to crack, such as cancers, are actually being developed up in the space, and that's what not many people realize. The space isn't just what Elon Musk says it is, but it is also resolving the sort of lifelong issues that we've had over here.
Thank you, Samir. And before diving further into internationalization question, we all come, individual or businesses, from our home market, and there is a home market bias. So can you tell us what it is, Lidia? And actually, is it good or bad to have a home market bias?
I think I would like to echo a little bit of you were saying. Like we see a lot of trends, and we specifically did our thesis based in foresight. So to be frank, you can all laugh about it, but we didn't have any surprises in the last 2 years. We already knew exactly what was happening, detail by detail, and it was contradictory to sell, because only after it happens, people actually tells you, oh yeah, you were right. But before that, people are telling you you're crazy, that's not gonna happen. And then it's very complicated to sell a story before it's there. But then the bias part, it's very difficult as well, because what will you prefer to know, the truth or your bias? And then, so we are concentrating in Europe. We have obviously a bias. We tell ourselves we are the better in sustainability, we are the better in innovation and all these things. Unfortunately speaking, some of the regions have proven that they are better in some of those specific things, maybe not all of it. But then the bias behind that is like what the market is consuming. And then, we talk about, space, healthcare, etc. And to be frank, every region has its own strength. And I think this is very important to remember, because at the end, we are working in the same direction. So having a bias, in a way, is not so bad, because every region is concentrated in that, but we need to work with other regions. Otherwise, it's very difficult to navigate them. So it exists, it's good, but we need to know the truth also.
Could I just add to this kind of local market or national market approach that we saw during the COVID times? I think COVID taught us, apart from fast tracking of sort of hybrid model of working and sort of stopping people as crazy as I am, who previously had flown to Hong Kong for literally 20 hours on the ground and 24 hours in the plane, not to do that again. But it's also taught us to concentrate, the importance of concentrating on the local expertise and the local focus. I think Trump is also teaching us with America First, or reminding us that we can actually do a lot more locally. And I often talk about the island mentality of this country, which, to the detriment of the Oxford and Cambridge universities, has also got a cultural issue to celebrate failure in startup ecosystem rather than stigmatize it. I think in America, unless you fail 3 times, you're not really a proper entrepreneur. Where here you fail once and you failed. So a great thing about connecting, I think your question is how do we connect the sort of local to the global, is that you use wherever you are as a great POC. Of course, if the country is as big as the UK, you can really pilot anything properly before you scale to Asia and America, and that's where the real opportunities are. Not everyone gets there. Lots of British entrepreneurs sell themselves too short at the sort of 100 million valuation rather than going towards the unicorn, but that's the cultural issue we've got to actually address. I think if you, with the influx of the Asians in this country and the Americans, I mentioned in the previous panel, we've lost 11,600 millionaires in the last 6 months, but we also gained 11,000 American families who moved from the US. They have their own issues nobody talks about. I was at the conference early on this week with Kevin McCarthy, the former Speaker of the House of Representatives, and he served 5 different presidents and governments. So I think there are tremendous opportunities. I don't like the fact that you come across people in London, they're very negative, they're very pessimistic, and actually quite unpatriotic in that sense. I think I look at things from a 100-year perspective. I think we've got to allow that geopolitically we're in a very tricky situation, hence the likes of Dubai are massively benefiting. And why shouldn't they? I think the multi-jurisdiction approach to wealth management, wealth preservation, and the investment is there to be exploited. And that's where I see huge opportunities.
I think my kind of input to that is everyone will, I guess, as a...
Oh, I thought it didn't work. Maybe closer to your...
You can hear me?
Better now, yes.
Yeah? Okay, great.
Sorry.
I lost my trail of thought now. Thank you. I think everyone kind of as a default goes to better the devil you know, right? It's the landscape we're all familiar with. It's what we know. We know how to operate. We know how to do things. But I think the amount the world has gone through the last kind of 5 years especially, I think that has shifted so much. There is so much more focus on a backup plan, on where you can shift things to protect yourselves and to expand and benefit from, you know, as you said, the different strengths in different countries and different regions. There is so much that you can kind of leverage where they've already done the hard work. You've just got to know where to look, who to speak to. I know most people just run to ChatGPT, but it's not always right, so promise you. So, yeah. I think that it's definitely shifted.
Good, you can keep the mic, actually,
nice.
Shelin.
Get to hear more from me.
Very good. So you told us in the introduction, right, that precisely your day-to-day job is to help go global, to make it short. So in your experience, you've seen a lot. What are key challenges that high net worth individuals or corporations would face and they should have in mind?
I mean, I don't know about the kind of difficulties. Everyone has their own difficulties, right? You've got to think about which passports you have, what your personal life looks like, what your business currently looks like. Can you step away from it? Do you need to be there full time? Are you going to close this down and completely relinquish your life, whether it be in the UK, Australia, whatever? You have different passports. So a lot of my clients are from all over the world. So there's different passports where there is, you know, worldwide tax. Yep, there are some places worse than the UK, guys. So they will tax them on everything, wherever they are in the world. So those things need to be considered. The business that's already running is obviously a huge factor. What the future plans are, because it may not be the best thing to set up in the UAE. It might not. Majority of the time, there is a way to make it work. We also cover the other jurisdictions like the usual BVIs and jerseys and stuff like that as well. So there is always a solution, but everything is so bespoke and individual. It's really difficult to say what the key challenges are or the most common difficulties because every single person's situation is so different and what they're looking to achieve is so different. So yeah, sorry, broad answer, guys.
No, we'll come back to that. So let's take now the perspective of VCs, and we'll take LP viewpoint later. Samir, if we were VCs, how should a VC position themselves to attract cross-border capital?
Yeah, I think the VCs are having a tough time, and frankly, rightly so. I think for far too long, the return on investment for the LPs has been quite dreadful. I think if you compare it to anything else out there, it's massively underperformed. And of course, you can't really look at the star fund managers who have returned, huge sort of returns to their LPs. It's often very, very cliquey environment and a closed circle and inner circle. I think when I talk to the antlers of the world that are incubating, accelerating, and investing in, and with the smaller VCs, the first-time managers, I think we're starting to realize that technology is going to play in a very, very important part here. I think the problem VCs have, they're very, very biased. I think the model is all traditional model of banking, which has really only been disrupted, but not properly with the Revoluts of the world. We still got a long way to go. So that's the issue number one. The issue number two is that they are struggling with retention of the best employees unless they're GPs. So they often move, so you don't have that longevity of those actually managing funds. Not too many of them actually get to the fund 3, 4, or 5. So we're kind of seeing them stopping somewhere down the line. And they're not differentiating enough. I think the VCs are going to have a lot more narrow focus. They can't be, appealing to all sorts of opportunities out there. I think we're going to see the consolidation of the VC market. I think we're going to see new entrants early on in the panel. Those that I'm a big fan of, that come from the world of sport or any high sort of achiever environment are coming in thick and fast, setting up their own funds, and they're actually attracting huge amounts of capital, not because of their star status, but because I think to be at top of the pyramid in any sport, whether it's tennis, whether it's football, whether it's volleyball, whether it's badminton, whatever it is, you've got to have gone through really, really tough time and challenging environments for decades to get there. And you may get there, you might become an Olympian, you might win actually a gold medal, but you may not be making much money. But you've got that grit, you've got that determination. So the issues the VCs have, not dissimilar to the politicians in a way, in some extent, or in some sort of direction that, if you look at the politicians, they've not really ever held a proper job. So you kind of give them the sort of the toughest job to actually run the country in our lives, and they get it wrong more often than not. So it's going to be a long journey and tough journey for the VCs. This is why I often talk about now that family offices are coming straight into investment ecosystem with the startups and scale-ups and the discovery of the new unicorns. The VCs have never had tougher competition. It's going to get tougher than that, so they've got to pivot somehow. And it's not dissimilar, you run your own fund, it's like you're running your own company. You try something, it's not going in the right direction, so either shut it down or you pivot. So I think I'd like to see VCs actually deploying the technology and pivoting more and specializing more. Then I think the LPs and the other investors will trust them more.
Thanks, Samir. So coming back to your UAE experience, Shelin, you see surely many who go for a second residency. So is this an absolute necessity? Does this always systematically comes with pros and no cons? What's your view and experience?
I mean, I personally don't see a con to having a backup plan ever. It's just risk management, which we all do on a day-to-day basis, whether we realize it or not. So yeah, I think there's been a huge influx, to be honest. You guys touched on how many millionaires left the UK last year. A lot of them came to the UAE, as we know. This year? It's only May. Yes. Wow. Okay. God, the UK is worse than I thought. Sorry, guys.
Traffic is already so bad in Dubai. It's going to get worse.
Sorry?
traffic jams.
I mean, they're building bridges and roads and everything. It's fine. They'll do an underground system or something soon. That's one of the great things about being there, to be fair. I think, look, again, I'm going to echo what I said before. There has been so much that has happened worldwide. You know, the UK have got it bad, but we can all see what's happening all over the world. There are so many people not knowing where they stand, you know, on a more dramatic side, not knowing if they're going to be alive the next day. But there has been so much that we have witnessed worldwide and still witnessing every single day with new things popping up, that a second residency for a lot of my clients is that security, that backup plan, that if something happens, even if my whole life is in the UK, for example, my family's here, my businesses are here, I'm not moving. But that residency is in place for so many of my clients who have no plans to move, purely for that security, and knowing that if something happened and everything fell apart, they can pick up their family and go. And I think, unfortunately, the way things have been, that is so much more important now than it ever has been.
Quite positive, yes,
I mean,
good.
I'm glad you took that as a positive. I felt like it went a bit negative.
Well, you said there was no cons, right? So good. Thank you, Shelin. Back to you, Samir, and don't worry, soon I have a few for you.
I'm okay.
Okay, now let's put ourselves in the shoes of LPs then, right? So in this international context perspective, how do LP evaluate fund managers outside of their home markets?
Yeah, it's a tough one. I think even the LP market is very, very biased still. I think but again, the LPs could be, I think we've got to differentiate institutional LPs, and then you've got the kind of private ones in terms of the ultra high net worth and family offices. There's lots of co-investment in listening to the experience of the others. I think the track record is becoming hugely important in the sense of beyond just the performance. I think the LPs are now doing a much more rigorous due diligence. It's no longer enough to look at the glossy reports they do and the pitch decks when they're raising different funds. I think for me, it's always important they are well referenced. You've got to make your own sort of investigation in the sense of calling people up. They've been working with them. I think you've got to ask VCs early on to give you a sort of reference points and those that have been with them from the beginning, especially if they're on, let's say, Fund 2 and Fund 3. One key question there is that what's the percentage of the follow-ons from fund to fund? You see some of them that have been very historically successful, which doesn't necessarily mean that they're going to be successful today. It's going to be the question of how they deploy the strategies going forward and what is their differentiating factor. Of course, looking at the team is one thing, but looking at the performance, another thing. It's kind of drawing your own conclusion. And to the earlier point on what sets them apart, I think there's lots of VCs, perhaps too many right now, which I said why there might be consolidation of some sort, or some might have to close down because their performance have been quite bad and abysmal in that respect. So competition is really tough. Cash is very expensive at the moment. However you look at it, whether you startup founder that's trying to raise capital, whether you new VC that's trying to raise a new fund, and then of course the deployment strategy, the investment thesis, what makes them unique and special, and why they believe that their sort of returns are going to basically be what they claim to be.
Thanks, Samir. So we are good, Lidia. Discussing investment decisions, asset classes are an obvious driver, I guess. But how about more classical factors such as liquidity, volatility? Do they still play a role? And how different in an international scenario?
Yeah, I think they still play a role, but we have so many different factors right now. Like we have heard, we are talking about technology of the gods with governance of the prehistoric cycles. And when we put in consideration all of that together, plus we have this multi-region approach for everything that we do right now, and it doesn't matter where you are, the jurisdictions, we have to take in consideration the domino effect of a different region. So of course it plays a role, but at the same time it plays a role like not only in the square performance as it was before, and the metric doesn't create the process. This is something that we have to keep in mind. And if we got there before in that way, it's not anymore that way. So we have to be a little bit more agile. We have to be a little bit more, different. You were mentioning this, like there is so much competition today, and specifically, I can speak about my own experience in the strategy that we are putting together. Is that the reason why it's attractive, and we have been called to so many different regions, including Saudi Arabia, for example. Most of the people are trying to get in the GCC. Obviously, you know this. We were not looking for that right away. We had it in the long run, and we were pulled in. So why was that? Because it was different, because it was new, because it was agile. And this is something that when you go to regions that are developing like this, like the GCC, it's insane. So we are so used to the back, like relax. Yeah, you have a few years to get there. Let's see how it performs, and then you can come back and maybe you can tell us more about you, blah blah blah, all these things. And then it's like, sure, I'll like I go back to you whenever I don't need you anymore. And this is a problem that we are facing today in the UK. We are facing that in Europe and in some places in the US. So it is important, but there are so many other things that are like value creation into the foresight of everything that is happening. And we cannot think business as usual anymore, ever. Not in VC, not in private, nothing.
A bit earlier, Samir, you touched on how LPs can, should, and do select GPs, right? But now, how do those LPs ensure funds perform and managers perform, again, in an international context? How different?
So, for example, in my team, as an example, I can speak about other teams as well, but this is something that I know very well, obviously. We have different type of intelligence put together. We all connect in the investment knowledge, of course, and the passion. That should be a passion to start with. It's an entrepreneurship driven thing, but we all connect in different things as well. For example, we understand public affairs it's a good thing to have, because we can see the future, we can see the agendas of the country and the region, the multi-region, and again, the domino effect that creates. But if you don't know this and you only have an analyst doing that, you don't really understand that. So the GP core into the decision making is not going to be anymore about the future. It's going to be only about the moment, and that's how it breaks, and that's why it's broken in a way. But then we talk about like not only multi-region but also multi-sector. Why is that important? We talk about segregated industries that are important to focus, but technology is touching everything. You cannot say AI is only for one thing. You cannot say healthcare is only for one thing anymore. Nothing. Satellites, space, etc. They are touching all the sectors. So if you don't have a clue idea of how multi-sector things work, then how are you going to perform correctly in the multi-environment? And this is something that is happening because technology is there. So we cannot continue thinking investment as we used to think before. Let's concentrate like a spider only in the spider web. We cannot think that anyway. So got a little bit more agile. It's good, I think, if we humble ourselves and learn from other regions how agile they are.
Could I just add to the earlier point about GCC kind of turnaround? Because I remember some of my mentors that did business in the Middle East 10, 20, 30 years ago said how long it took them to actually close the deal, because the Saudis were just too slow, too disinterested for the size of the deal that these Europeans were after. So it took often years. And that's totally changed. I was on the phone recently to one of the scholars in Qatar. And you just sense the sort of thirst and hunger for the know-how a friend of mine built a huge esport company that PIF just bought it off him and then injected $1 billion for him to drive it to 1,500 employees and just step down. I think the appetite and hunger that we are seeing now in the Middle East is something that I don't think we witnessed, but maybe in America and San Francisco in the last 20 or 30 years. And then to the point of San Fran and Silicon Valley, you know, we often discuss the fact that 30 years ago, it wasn't what it is today. So everything takes time. And I think we have to see what's going on and try to assess and reassess within our own ecosystem what makes sense in terms of the trends. I think people are following trends, in my view, a bit too much. I think it's got to form part of your own thesis, whatever you're doing, an LPVC, a private investor. You've got to almost try and connect the dots, because I see still too many disjointed portfolios. I think we're seeing too many undiversified portfolios, but also very siloed approaches. So I think this is where the family offices professionalizing their offering and their investment has been a game changer in the last 10 to 20 years. And if we fast forward the next 10 to 20 years, we're going to see a sort of even a big emergence. I think there's parts of the world still, they're very unfamiliar with family office concepts. It's still very much the Western thing. But as that kind of gets more underway, I think that's going to be the force, possibly that will massively overtake the investment muscle that the VCs have held over the last 20 years. So I'm actually keen to see how the whole thing evolves.
Yeah, to like piggyback off what you said, the UAE has changed so much for that. So you can start small and things can literally happen overnight, which is great for you guys, but it can literally blow. I don't think I've ever seen anything like it. The UK, especially growing up in London, you think this is where the money is. But I think when you go to a different environment like that, it's like, okay, actually London's a bit more slow and steady and safe. If you want something to kind of explode, you've got to take that risk and be, you know, I'm not just pushing UAE guys because I'm there, but just in general, you've got to kind of take that risk and try something a little bit different. You know, 10, 15 years ago, people wouldn't even go to the UAE, let alone invest there and set up their business and expand. I think
5 years ago, Dubai was dead. I think COVID saved it.
dead.
And no, it was. I think everyone's leaving. I remember now so many families have moved there right post-COVID, and obviously Brexit and non-dom and everything else. But it was the tired city. And I think that shows you what 5 years can do for any city. I think we've seen the dominance of London post-early 90s. Entire Paris and Milan moved here because of their tax issues, and so did New York. But, you know, now we're seeing a bit of a reverse effect. But I always say London stays London because of the history and because of the heritage, regardless of the tax structures. And I think it's teaching us to think again. I think maybe we got a little bit too complacent in London with whatever structures we might have put together. Maybe we got to look at I was talking to a guy from Mauritius. He said he's got lots of people from Dubai, from England, from Switzerland, from Luxembourg, actually setting up trusts and looking at a sort of multi-jurisdiction approach. Because again, you know, we can't rely. I mean, these days with, you know, Secret Service and security issues and, you know, money laundering and so anti-terrorism acts, you've got to be very, very careful how you run your family affairs, how you run your investment vehicles, etc. So I don't see this as an issue. And I don't think it's got to do with Labour or Conservatives being in power in this country and the non-dom issue. I think it's a bit of a wake-up call. We're seeing it with the climate change issues and ESG and what Davos totally didn't talk about this January, and what Davos talks about to set a bit of the trend for the year, what the investors and the politics should really focus on. So again, I try not to listen to what everyone else is saying. I think it's good to hear what's going on, but you've got to be focused on what you think where you can create value. And if you're not into value creation business, you're out of business sooner or later.
Very strong point. Another strong point is that the American dream now happens in the UAE, right, Shelin? Um, so you will close the discussion, I think, so we can have some time for Q&A. Shelin, again, with your experience supporting, all these individuals or corporations going international, what are common pitfalls, not to say maybe mistakes, and I guess what is an advice you can give for those considering it?
I mean, I think we kind of crossed over with the last question on this, but I think when individuals or corporations are moving over, I think a lot of them don't necessarily think about what they need to do for what they've got existing. For example, whether it's an individual and tying up things in their home country or wherever they're moving from. You can't just book a flight, pack your bag and go. You've got to make sure that you kind of close things off and don't leave yourself kind of open or liable to any tax or other issues. So that's probably the biggest thing. Again, the UAE have 0% income tax, 9% corporate tax, but then it can go up to 15% corporate tax depending on your worldwide earnings on your business. Obviously, if you're a very, very big player, then you could creep into that 15% corporate tax. So again, knowing the legislative restrictions and implications and just making sure they do the work before they come. I think a big part of my role is, yes, it's the legal structuring and making sure you guys are set up correctly there, but also connecting clients to tax advisors that know about their home country, know about their passports, and make sure they're not exposed, because you don't want HMRC coming after you in 10 years' time after you've made all this money and you thought you were safe and then...
You've spent it all.
Yeah, exactly, which is very easily done in the UAE.
Good, thank you very much, panelists. So, Q&A.
This very quick question. Of course, all the money is in Dubai. The tax is very low, almost none. But what about talent? There is a big gap in terms of talent. When we are having all the money that we have and all the taxation system that we can have, very attractive all around the world. But the talent gap is very big. We cannot compare a talent place like London or Cambridge or Oxford, let's say, because of the universities over there, the spin-outs from there. So what's your strategy? This question may be for all of you. What's your strategy in terms of investment to fill that gap? Thank you.
So you're talking about the gap of talent in Dubai, and what's the strategy to attract in Dubai or into Dubai?
Sorry, the question threw us a little bit.
It's very easy to find talented people and talented startups over here. You can find them and you can invest.
Okay.
In Dubai, it's a little bit different story. You have a very small population. Okay, you are talking about in Dubai 2 million. So in overall, the UAE is around 8 million. The amount of talent over there to generate successful startups and unicorns, if you want to talk about unicorns, are very, very rare, even though you have all the money that you have. So over here, you can go just to Cambridge, you can catch talented people over there, and you can have a big potential thing. How can you combine the talent?
I can answer that question.
Create startups available.
I can jump in after.
With such a place like Dubai and having all the money that you have. So in terms of investment, I mean, how can you link both ways if we are talking about?
Okay, maybe you can touch on the investment
so yeah, you-
piece.
I can. Sorry, I can maybe start because probably you have something. Yeah. So what I've seen, and this, from my early experience, I think, and something similar that happened to you, what I can tell is that it's easier to get the right talent, in a way of saying, because you can pay for it. And the talent, when you're looking for it, you can find it. As you said, it's here across the street, but then the people have money to pay for it. They simply go to the same place because they know how to access it. I think that's a little bit of like, I can give you an example that it's very ridiculous. In Europe, so I'm based in Brussels. In Europe, the European Commission pays an expert something like 500 per day. And in the US and the and Dubai, and also in all the countries in the GCC, they pay €500 the hour. So of course, the talent will say, yes, let's go there.
Yeah, I think just to kind of build on that, I think we've understood your question. There was a lot of moving parts, so I hope we have. But
It's just an
If you
example.
are employing people, that's okay. But if you want a founder or co-founders, 3 people hanging out and they decided to have a startup, so you cannot just export that from Europe to the US.
Why not?
That's what they do.
But-
But that's what they do.
Usually, they are teammates from universities, or for example, if we talk about the Silicon Valley, they are into the, for example, Stanford or these kind of things. But if you are talking about employing after, having your own startup, that is totally different.
I think the point you're making is that as a brand new startup founder, the sort of it's tough because the market is smaller. They've got the money, but to their point, is they buy it when there's a proof in the pudding when it comes down to here, to Europe, to America, and they bring that in and they scale that across not just the UAE but the entire MENA region. Now the MENA region then can exploit that because you've got the money. Then you can scale it back to Asia, back to Africa, back to the US. So you all of a sudden you bring the startups that would have maybe struggled here, but they've got a great idea, they've got patent perhaps. You inject the money because money does matter with a good ecosystem, and then you scale that up globally. I mean, a great example of who's been doing that for decades is Israel. Israel is not the market for the Israeli startups, but it's a great sort of environment for the POC. But where do Israeli startups go? They go into the US, they go into Europe, and at times they go to Asia as well. UAE and the Middle East are doing exactly the same thing. They've created the environment where legislation is so easy. There's no hurdles, there's no bureaucracy. Everyone wants their businesses to succeed because they realize with the tech know-how, they can basically take on the world in the same way as the Silicon Valley and the Americans do.
So take from here and export it to the UAE and then go explore.
Well, and also another example is China. I mean, the Chinese businesses, they've succeeded in China where the businesses set up by the Chinese in London, Europe, and America, and then basically did a spin-off back into China across the Chinese. But they were seen as made in Britain, made in the US, made in Europe, and that's why the Chinese population and billion plus bought into that.
I will build on that still before another question. So I think there are different bricks or different pieces of the puzzle that we can consider kind of independently first. If you are an emerging fund manager, one brick is where is good tech? Second brick is where is the great market you want to penetrate? The third is where is the money to raise from? And where can or should that money go? So practically, you may find great tech in Cambridge, you invest here. But then the market, you find it should be the US. We discussed the UAE, why not? But actually it doesn't have the UAE from a commercial perspective, right? So that is a move that many European businesses have in mind, right? Go to the US. The interesting question as well is, where does the money come from? And you can raise from the UAE, go to LPs there, family offices, and tell them, well, actually, my business is European and we invest locally. Or are you interested? And they may say, yes, why not, if they find you have a good track record and it works. It's not systematically that money you've raised there has to be deployed there, of course. But the point is, it depends. And, every scenario is different. And it depends also on your LPs. Typically, like government-backed funds, as we have in Europe, Finland or Singapore or some others would want you to support the local economy. So you have this condition. But my point is, you are not always so restricted. Go for good science where it is, great market where it is, attract money, be careful what conditions you have, as in where it should be deployed. And basically you have your pieces of the puzzle to build your optimal strategy very much globally. Yes, so sorry, got a bit late in question queue.
Thank you. I have 2 questions. So the first one is on this tax-friendly environment in UAE, and it's very appealing to startup founders like myself. But there is some change recently, right? Like in 2018, VAT was introduced, then 2023, there is this federal level corporation tax. So how sustainable is the current tax-friendly environment in UAE? Do you see that might be tighten up? And the second question is, like, with this current geopolitical tension environment globally, is there any risk that can affect like UAE's startup environment?
Okay, fine. So from a tax perspective, I think, I don't know how to word this, but the UAE care about their reputation, right? They want people to keep flooding in. So I can't imagine overnight they're just going to say, okay, we're going to charge the same amount of tax as the UK, because then why would people leave other than the weather? But, you know, the tax is a huge, huge driving force. So from them, even the tax being introduced was actually a positive thing because it helped close the books for certain countries as well. Those tax introductions meant that they no longer have to share certain information. So 9% corporate tax, but your country isn't necessarily getting everything given to them on a plate. It's not really the worst thing in the world, is it? VAT is 5%. It's only applicable if you're doing business locally anyway. The 9% corporate tax, they've still got levies and stuff like that anyway. For SMEs, for example, people that are starting up and trying to build something from scratch, you pay 0% on anything up to 3 million dirhams. So it gives people that leeway and that chance to actually get somewhere before you're paying that money anyway. And if you're turning over more than 3 million dirhams, then, you know, 9% on your profit isn't the end of the world. Personal tax is still 0. And obviously 15% for the larger corporations that are making hundreds of millions of dollars. So I'm sure they're not worried about that compared to the other jurisdictions they're in. I mean, I don't have a crystal ball, but my personal opinion is no, because I think they had to do this because of some pressure from other countries as well. There were a lot of political reasons as for why they've implemented these things. Do I know if it will change? No. Do I think it will change? No, because they're going to lose a lot of appeal. They invest into their country, they invest into their people, and I can't imagine that. And what was the part 2 of your question? Sorry.
Geopolitics.
Sorry?
Geopolitical risk for startup environment in UAE.
I mean, do you guys have anything to add?
Yeah, so look, Trump was there a couple of weeks ago. So
Last week.
Last week. So that tells you that obviously they care about geopolitics and the risks there. We're hoping for a ceasefire between Israel and Palestine. And, you know, that there is a huge focus on making sure that that sort of region gets stabilized again. And I think we're on the right track. I think one thing about Trump, you know, like him or hate him, he is trying to make sure there are no wars around the world, however much it might suit the American interest or not. But he was the president that literally had no wars in his first term. So let's see what happens, but we're all looking at that sort of geopolitically. I'm sure that the sort of Middle Eastern families that are very much running the show there are making sure that too.
I think they're very good at being like Switzerland as well. They try and stay out of everything. And although they are geographically placed in the Middle East, they do separate themselves. You know, Saudi Arabia, if I can get the words out, and the UAE do try and detach from the stuff that goes on around the world as much as they kind of do voice that they condemn certain things that go on. They tend not to place themselves in the middle of it for the protection of their country and their people, but also for the relationships worldwide.
I think we had a number of questions, and so let's try and maybe be a bit shorter on answers.
And on that, I'll keep my questions succinct. Good afternoon. My name is Sabrina Clark. I'm the managing partner of Build Global. I just wanted to go back to a point that you made that I appreciated earlier around how VCs need to change and how they need to adapt and evolve. On the flip side of that, how do you think family offices need to change and adapt as they compete in this space, and also how they value exchange differently? First question. Second question, your observations on trends of alternative investments, because the secondary markets has exploded, for example, because of illiquidity. What do you see in terms of family offices and how they are adapting both in investments and how they need to change?
Thank you. I think I mentioned the need, and which is happening with the kind of professionalization of the family offices. So I think they're becoming a lot more professional. They're starting to hire the talent outside of the family. We're seeing more and more sort of move between the VC world and the family office in terms of who heads their investment portfolio. The families are wise enough now to know that the son can no longer manage the family assets that the father has built, so they need to get the professional people in. And I think they realize that co-investment opportunities with other families is what makes a difference. I think the exchange of the deal flow inside the family ecosystem, almost syndicating the investments in a way to rival the much bigger institutional investors, is what's happening. So I think that's happening. I think it's going to happen more and more. I mentioned the fact that it's not professional everywhere, and it's not even in use everywhere else in the world. It's still a Western sort of phenomenon rather than Eastern, but I think we on a sort of trajectory to change that. And what was the second question? So yeah, I think one of the big winners of the alternatives is going to be the digital assets. I think we are seeing everything being digitalized these days. Of course, everyone's talking about Bitcoin being as a digital gold, but actually digitalization of gold, digitalization of real estate, digitalization of bonds. I think people don't realize that you've got the JP Morgans and Goldman Sachs of the world that have invested massively in digital assets. You're seeing the exchanges of $1 trillion daily volume, which you don't see on the traditional exchanges. So my bet is that digital asset classes, hedge funds that are actually focused very much on the digital assets as the alternative, is there. And of course, commodities now, with the flip side of being able to get you yield. So if you digitalize gold bar, you can actually be gaining yield out of it, and you still own it 100%, and you actually create the paper out of it. So I think we're going to see huge uptake from the family office, the diversification portfolio into that realm. It's still very little. I think we're talking about, if the family offices were smart enough to deploy just 1% of their capital towards 5%, I think in the next 5 to 10 years, that's going to be huge.
We need to close. One last very quick from you. You have the mic.
I'm not sure if it's very quick. Thanks, guys. There's a lot to unpick, so I'll sort of keep it a bit briefer. Mostly focused on Europe. So we've got 3 sort of European family offices there. You mentioned earlier about the macro environment and sort of how things are interrelated, especially throughout sectors. With the tariffs, I think that was a big scare for the global business environment, investment environment. But with every scare and what we try to solve within the wars, there's also opportunity. Where do you think the opportunity lies within Europe, especially from a regulatory, political perspective, to make Europe, UK, stronger again?
So I think, okay, based in Brussels, what I see a lot, you were mentioning something about the digital future in a way, like assets, but we see also like global speaking, the G20 has already put together an agenda for the digital coin, for example. This has already 5 years-ish, maybe more. So that means that it's already ongoing, and you can see it in the different regions, multi-region coming together, etc. Now, coming back to if we put all of that together, Europe and the UK, in my opinion, and I said it before, and I would like to repeat it just because this is something important that I see across all Europe and the West. The GCC, for example, is moving into the direction of legacy, which is a different type of wording for family office, but it's the same. And then when we come back in the West, the problem we have is that we are too proud. And we think that everything that we do, it's the way it's supposed to be. But then when we go to other regions and we see the things moving faster, better, stronger, harder, is like, what are we doing wrong? And then what we are doing wrong is something that you were saying before. We're too complacent. Like we are so, relaxed in our own position. And when we're thinking about changing something, we're like, okay, I'm going to change the way I hire people, and now I'm going to do it myself. That's not change.
Can I just add, America once broken Europe for a long time. Once they jointed Europe, they succeeded directly or indirectly, consciously or subconsciously, on the Brexit project. Actually, I was at Coutts last week. We talked about the single benefit of Brexit. We couldn't find it. Not a single one. Now, we're not going to go back because we're also not going to go back to Europe anytime soon. But that's the reality. However, Italy, Spain, and Portugal have been massive, actually, beneficiaries of what's happening in the UK. It's still Europe. This island has got Europe just up the road. It's still Europe. I think that the joint and united Europe will always be there with a heritage tradition. I think we've been asleep for far too long. I think the European investors and European founders and the European ecosystem has been asleep in my view, for a bit too long. But now we're waking up. And this is why I say in any turmoil, it's a great opportunity to reassess where we are and what we want to be. Look, we're all global citizens. You know, today with the passport, whatever passport you hold, you can go around the world. To point early on, you know, that the multi-jurisdiction structures are necessary, whatever they are, trusts, SPVs, etc. So in my view, it's never been more exciting to be in the world of business investment and opportunities. We've just got to be smart, and we've got to find what it is that actually gets us out of bed every morning, and just face the challenges and embrace them.
Thank you all. Thank you, panelists. Thank you, audience, for a good Q&A discussion.